And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. I have Sean next to me today. Sean, say hello to everybody.
Good morning. That's
a lot of good mornings. Sean, how's your morning? I feel like you're extra happy today.
No, I'm just relaxed. I'm mango.
He's mango today. Today, guys, is going to be an important day. And I know that you guys are like, Krisha, for you, every day is an important day. It is. What can I say? It's a very interesting world that we're living in right now. But why is today specifically important? Sean, we have a very important piece of data that's going to be released today. And that, my friends, is the CPI, the Consumer Price Index. And the markets have been reacting to this number, mind you. Okay, so now I posted this on the Mango Grove Discord chat. For those of you who are not a part of the Mango community, this is your chance to join in because we will be closing out the community as we, move into the rest of the bull run phase of the market. And I still do believe that we're in the bull run phase, or we're sort of commencing. We're getting into it. But anywho, I posted the CPI data right here, Sean. I said, good morning, Mango. CPI data comes in today, and market is likely going to react here. Now, here's the forecast. The forecast for the CPI read, Sean, is at 4.1%. Right? And I've noticed that historically, depending on the CPI read against that forecast, that's when the market reacts. So if today's CPI comes in lower than 4.1%, I think the market reacts to that number.
I think the market reacts, especially if we get a 3 handle. Now, just a bit of an explanation for the jargon. Now, just a quick explanation on the jargon, guys. If you ever hear 3 handle or 4 handle, what people are essentially saying is all that matters is the number before the decimal point, right? So even though the difference between 4% and 3.9% may not be all that much, negligible, the markets will react drastically to a 3.9% because hey, we are at 3% inflation now, right? The market will automatically mentally round the number down to 3. So if we get a 3 handle, it's going to be a huge thing.
Yeah, and in fact, many of the indices like NASDAQ and SPY, Sean, they've already technically been rallying. Like they had phenomenal weekly closes, unlike Bitcoin. So I'm wondering if,
I want to talk on that a tad bit.
Okay, yeah, go ahead. Do you want me to switch on over to the chart for you?
No, you can keep this on.
Okay.
I was just trying to get a feel for both sectors, TradFi as well as crypto, in regards to the CPI that's coming out, right?
Right.
So when TradFi is looking forward to CPI, they are like, oh, hey, CPI has been trending down. We are likely going to be getting a low number this time as well. Because look at the previous CPI. It was 4.9%, right?
Yeah.
So we got a 4 handle right over there. And now this time the forecast is 4.1%. So expectations are lower than prior.
Yes.
Right. As well as TradFi is in a positive mood right now because we're making new highs on certain stocks. Nasdaq's looking good, SPY's looking good, etc., right? So the expectation is even lower, right?
Yeah.
So they're looking at CPI as maybe a positive event to give us the next boost.
Yeah.
Right. There's a bullish sentiment to the event. Now in crypto, however, people are like, hey guys, look at what's happening. SEC has sued Binance, has sued Coinbase. They're going after all the altcoins, and we have CPI coming as well. Oh my God. So it's really interesting how these events, right, can be pitched in either a negative sentiment or a bearish sentiment. It's how an event is really perceived that matters, guys, right? It's not just the event. The fundamentals of the event matter very little. It's the perception of the event that really matters more than anything.
Exactly. So this is going to be a number to watch out for today, all right? So we get the CPI read in today. So if the actual comes in less than 4.1%, I do believe that the markets do react to that information. And why is that? Because a low CPI print would basically give Jerome Powell some fuel to say that, hey, they're going to be stopping rate hikes, right? They've been raising rates now, guys, for months on end, over and over. And guys, rates It's the price of money. You know, when the price of money goes up, you're not too inclined to put on any risk anywhere. You're not inclined to borrow any money when it's so expensive, right? So him basically coming out and saying that, hey, we're not going to be raising rates is going to be a positive prospect for the market. So now 81.5% of market participants right now are saying that Jay Powell tomorrow is going to come out and say that, hey, we are going to be stopping the rate hikes. All right, so these are the two major events to watch out for the next, well, today and tomorrow. All right, so next 2 days going to be important. But what always precedes all of this news, and this is something that we are very big proponents of here at Mango, is that let price action guide the way at all times. Let price action guide the way. So now, Sean, yesterday we spoke about quite a few things as far as price action is concerned. We had a beautiful weekly close. Not a beautiful weekly close, but an interesting one nonetheless. Price on the weekly lost the 200 simple
beautiful
moving. It lost the 200 simple moving average, right?
But it held the 21.
Okay, it held the 21. All right, fine.
So we had a discussion on that too yesterday, so you guys should check that out. But quick summary on that is that, hey, this is one of the few times that the 21 EMA has been underneath the 200 MA on the weekly, right? So we're talking about the weekly 21 EMA here and the weekly 200 MA here. And this is one of the few times. The last time was, guys, 2015, 2016, which a lot is lining up now with that juncture. Not just price action, but also with the way the markets have been reshaping themselves in terms of the macro setup. Right? We can talk about that in a different video, but I would like you guys to all go and examine that area as a bit of homework, right? Mango homework for all of you guys. Just go and watch that entire consolidation zone and the entire run up to $20,000. We ran from $200 to $20,000, guys. So I'm not saying that's going to happen this time, but the price action over there is very important to understand. 21 EMA lived underneath the 200 EMA briefly over there. So is the market picking the most important EMA or MA as low as possible? Like, it's kind of hard to make that call. I would have liked to see that 200 MA get defended, but the 21 EMA is being defended as of now. So it's something that you cannot ignore.
Yes, that is true. And also, given the complete sort of backdrop, we have to consider every piece of information, right? Nasdaq, SPY, everything is rallying. It's just that Bitcoin and crypto, most of the crypto space is seeing this little pullback to the downside, primarily because of the FUD revolving around SEC and Coinbase and Binance, so on and so forth. So there is a bit of FUD here, so that also needs to be considered. However, like I said, TA is going to lead the way, and that's why we've given you guys parameters yesterday, right? There is a trade opportunity that we're looking at here on the charts. Now, specifically on the weekly time frame, we know that, okay, that 200 simple moving average historically has been a very, very important juncture of the market. But now, in addition to price losing the 200 simple moving average, and this is primarily why I think that Bitcoin can still drop further, right? And I'm going to be erring to the side of price action here. Yeah. Okay, what is price doing relative to those key regions? We lost the 200 simple moving average. In addition to that, if I knock off everything else now and turn on the bullish FVGs over here, we've penetrated a brand new FVG, and usually these are inefficiency pockets, right, in the market. There's a lot of liquidity stuck here, and every time price actually punctures into the FVG, we either find our way at the midpoint, which comes in at around $24,000, or we make our way all the way down to that bottom of the FVG, guys, and that comes in at $22,000. Okay, so we have this one more sort of bearish tilt to the most immediate time frame.
There's something else here too, Krisha, that I'm not liking at all. That's I'm glad you kept the 10 SMA on right over there. So look at the white 10 SMA.
Yeah.
Right. So you see the slope, guys? Zoom in a tad bit for them, Krisha. Yeah, there you go. You see the slope, how it's sloping downwards? I don't like that, right? And the market does trade in the direction of that slope. And keep in mind, guys, simple, very powerful strategy is based on the 10 SMA living above the 21 EMA, right? So at the moment, if the 10 SMA keeps going in that direction without price defending the slope, well, it's going to cross underneath the 21 EMA. So should I turn on the 21 EMA quickly again? Yeah, there you go. The yellow line is the 21 EMA. The 10 SMA starts closing in the gap on the 21 EMA. I'm not going to like that picture at all. If you zoom out, you're going to see that we crossed a few, like, towards the end of March, right? The 10 SMA crossed bullish on the 10 SMA crossed bullish towards the end of Feb, and ever since then we've had a nice little uptrend. It's not been an aggressive uptrend, but a nice uptrend. I want to see that hold. I want to see come into equilibrium. Yes, the way it is right now. I want to see price start living above there. So even if we do take that leg down to the bottom of the FEG, I don't want Bitcoin spending too much time there. I want to see a quick pickup and then a rally into the 21 EMA and closing above the 10 SMA eventually.
Yeah, so right now I do believe immediate time frames, guys, the bears still technically have the edge considering how many levels they managed to win the battle on. Okay, so now 200 is lost, FVG, we're well within that. Yesterday I showed you guys the Bollinger Band play. Let's just quickly go over that once again. Let me take you guys on here. Oh, there's this too that I want to talk about, but first let's get on over to the Bollinger. Okay, weekly. So we are looking at the Bollinger Band and the MACD. We have a bearish cross on the MACD. All right, so we have a bearish cross on the MACD. Bollinger has also crossed underneath that mean. All right, and we're currently still using the mean as overhead resistance. All right, which comes in at around 26.3K. Now, this is that entire sort of cluster of resistance that we have, wherein we have, yes, the Bollinger, the 200 simple moving average, as well as the FVG. I just have it there as a green cluster right there. Okay, so this is the current play, and that's what I'm saying the bears have the edge on the more immediate time frames. But now, in addition to this, to give you guys another bearish tilt, okay, just to help you out, just to solidify things a bit more, put on your Mango dynamic. Okay, yeah, we're on the weekly dynamic. We still have quite a few days left on the weekly, but the 4-day, guys, closes tomorrow. Now, for those of you who are following my bull run triggers, you guys know that the 4-day dynamic was a very, very important hinge on one of my bull run triggers, right? I was looking for the 4-day to close over the dynamic as well as the dynamic turn green, and what do you know? We lost it back on June 2nd, managed to take it back up, still living within those zones, but if tomorrow we lose the dynamic once again, that is another bearish tilt on the more immediate time frames. All right, so keep your eyes on this. For those of you who do have access to the Mango dynamic indicator, it can be very, very powerful on keeping you on the right side of the trade. Alrighty, so now, yeah, this is the overarching picture. All right, so let's get on over to the trade of the day. Sean, what is the trade of the day for them?
I think it's the same trade that we highlighted yesterday. Well, we've not activated that trade yet, right? The retest of the 200 moving average, you look for a short into that. At that point, the invalidation is essentially your entry, right? Because if you do close a weekly candle, well, I'm looking for a weekly candle above the 200 moving average as an invalidation. You mentioned how you're looking for 2 daily candle closes as your invalidation, yes, right? Okay, so again, guys, these are just trade ideas. You're going to have to make this trade your own. Maybe for you, a single daily candle will be enough. Maybe a 4-day candle, right? So for me personally, if I'm trading this based on the weekly, I'd like to see a weekly candle close above the 200 moving average for the invalidation. But the entry, I'd like to build the position anywhere at the 200 moving average or around it, above it, for, guys, if we see an impulsive move based on today's CPI data, I wouldn't be surprised if we test the 10 SMA and still close underneath the 200 moving average, right? That would be a really nice trade. So I'm looking for that, right? I'd be looking to hedge positions as well over there, not on Bitcoin, but I'll be looking for altcoin shorts. That's how I'll be hedging my Bitcoin, by looking for shorts on altcoins, right? So if we see a big move on Bitcoin towards the 10 SMA, I'm going to be looking to short certain altcoins.
Oh man, that would be brutal if we get our way all the way up to the 10 SMA and get rejected there. That's nuts.
It could happen, and it's actually pretty likely with the current conditions, right? We have an entire week that could unfold, guys. We close underneath the 200 moving average, right? So just mentally, by default, you have to assume that the market is going to look to defend that. Even if we rally, assume that the market may and look to defend that, because we have an entire week for price action to unfold. So don't let just one daily candle influence how you think the whole week will close.
Okay, that's good advice also, because get greedy on your bids. Get greedy on your bids. Why? Because this is still very much a weekly uptrend. Okay, that's not lost yet. So get greedy on those bids, because it's just going to help you psychologically and also help you get out of your trades when the time is right with a very, very, very minimal loss. So yeah, but right now, I do believe the bears have the edge to the downside. For me, I'm looking at the short opportunity as the 200 simple moving average. If you see additional strength and you think we can get up to the 10 SMA, by all means, the 10 SMA might be the better short opportunity. But for now, what is the targets that we're gunning for to the downside? Well, keep it simple, stupid. For those of you who have access to the Mango dashboard, the FVGs is going to be your guide, okay? Let it guide your target range. Now, the target range we're looking at is $24,000. We're looking at the mid of this, in addition to, well, the bottom of the FVG, which comes in at around 22K. Now, this is technically all we have for you for the trade setup as well. You guys have the entry, you guys have the invalidation, and you guys have the target. Sean, is there anything else that you want to wrap off with today?
Nope, I think you nailed it all, Krisha.
Cool beans. Now, if you guys enjoyed this video, make sure to smash that like button. And hey, if you want to keep up with the latest mango juice, make sure to hit the subscribe as well. And we will see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.
Ciao.